Hi everybody, this is Bob Ichino from Path Trading Partners along with my co-founder Mike Arnold. It is October 17th. This is a Path Chat cryptocurrency educational update covering Monero. We're just going to cover Monero today, but first I wanted to talk about a question/comment we got from you, Owalski, which I really appreciated, by the way, because it's really a different kind of a comment for us. But I'm going to read the comment and then I'm just going to kind of talk about it a little bit. The comment was, I will never understand trading altcoins against USD, obviously US dollar. Only Bitcoin pairs matter. The dollar price usually moves with Bitcoin. What makes the XMR USD chart hard to read and understand sometimes? You can easily spot many Bitcoin events on it. I don't think that's exactly what he wanted to say, but it's fair enough. Trading against Bitcoin makes more sense. Number one, you don't create a taxable event. And number two, the whole crypto market is one big pump. Going to USD means that you short it, which is way riskier than balancing between two strong coins. My rule number one, never short crypto. It can be nasty. So what I wanted to do is address this a little bit, but let me just kind of read the thoughts that I wrote out. I didn't put this in the reply. I wanted to do a video on it instead, but I'm just going to read what I wrote up. Thank you for your comments. Couple of points from our perspective. We look at altcoins as legitimate tradable instruments for the purpose of these videos. We're not trying to cause or prevent taxable events. We are simply describing and defining short to medium term trading opportunities. We are not approaching this from a tax implication standpoint. That's very important. We're not telling people what to do to hold cryptocurrencies and avoid taxation. We don't do long-term investment advice on this channel, at least we haven't to date. Your point is valid, however, and we would always recommend people do their own investigation as to what is taxable or isn't. Short-term trading creates different tax implications than long-term buy and hold, and you can only stay invested in cryptos by trading amongst them. So my point in writing that, again, I didn't post this yet, I thought I'd put it in the video instead, is by saying that we're not addressing any sort of tax implications because we don't do that in our videos about traditional trading, FX trading, stock trading, commodity trading. Taxable events are up to the individual. What we're doing is trading to augment income. We're not trading to stay in investable cryptocurrencies. And I think what you, Olwowski, is saying versus what we're saying, he's saying, I want to stay invested in cryptocurrencies and not create a taxable event. Now, the fact of the matter is, in the US, any increase in assets is theoretically a taxable event. Anytime, whether you convert something to Bitcoin and make money or convert it to US dollars and make money, if you called the IRS and said, am I supposed to pay taxes on this? It's my opinion, and this is only my opinion, that if you made money in Bitcoins or you made money in US dollar, the IRS would try to get their cut. Having said that, in order to trade short term for the purpose of augmenting income, you need to trade versus a stable and universally transactionable baseline currency. So us living in the US, it makes sense that we use the dollar. Jamie Dimon cannot talk down the value of the US dollar like he did with Bitcoin. China cannot realistically ban the US dollar overnight, as they did with cryptocurrencies. They buy crude oil in US dollars, for example. They would buy gold in US dollars, copper in US dollars, commodities trade in US dollars. So we trade altcoins the same way and for the same reasons that we trade oil, gold, and stocks, to augment our spendable incomes. Mike and I are believers in altcoins and cryptocurrencies. However, we do think that currently, in the current situation, things still need to relate back to that stable baseline, which would be US dollars, because that is the money that you can spend currently universally. Now, there's some Colombian stocks I would love to trade in, but the volatility of the Colombian peso makes it a trade with two fronts of risk. Whether I'm right or wrong about the stock itself, and then the volatility of the Colombian peso versus the US dollar, because the baseline for Colombian stocks is the Colombian peso, and the volatility of the convertible currency that I needed to end up in is too high. So I don't trade those things. So that's why we use the US dollar as the baseline. Now, UA Owalski said I never short cryptocurrencies. One thing that I've learned in my 25 years of trading is to never say never in trading. Use a stable baseline, but still you never say never. There'd be plenty of people that would tell you they'd never short Tesla, but someday Tesla is going to go down. It may go up for a while first. There's plenty of people that would tell you never short Bitcoin. Well, versus what? If all of a sudden there's some sort of universal regulation against altcoins, which I don't think is going to happen, and I don't think would be successful if it did happen, all altcoins will go down. Versus each other, they won't go down at all. But what's the point of holding something if it's not an accepted form of currency? So I think that you, Owalski, and us are approaching this from cross purposes. I have no intention of doing this analysis that we do in order to avoid quote unquote taxable events. We are just looking for trading opportunities, and we believe in altcoins as an actual realistic trading instrument. But I think that the comments that he made are valuable to our subscribers. I really do. So if you're somebody who is trading in altcoins to hold them and hold them only, and you don't ever want to convert them into US dollars, then what he said is very valid. And I want to thank you for that comment. You, Owalski, if I'm saying that right. Thank you for that comment. Keep the comments coming. That's just kind of our take on it. And that's why we do it versus US dollar. We believe in cryptos, but there has to be a stable base to get a fair value of relative strength, one crypto versus the other versus that stable baseline. Having said that, let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. Monero US dollar, 4-hour chart. So you ran up, hit both our targets, and ended a clear path. This was actually a trendline trade also on the daily chart, and we'll flip over to that. But both these targets were hit. They are now done. The really interesting setups, though, are on the daily chart. So let's switch over to that. As you can see here, triggered a trendline trade, came up, end of clear path, and both the GAN levels we talked about. So that is done. And now we're also setting up a really strong horizontal channel, which could trigger either way. We have all the moving averages are essentially flat, which you can see we're in congestion. And when we get into congestion, the moving averages tend to flatten out in the middle of the horizontal channel. So what are we looking for? Let me redraw this trend line first, though, because we could also have another long trend line trade. We could trigger the horizontal channel breakout and a trend line trade to the upside, with the full target on the trend line trade being 121.91. The horizontal channel, we'd need a close above 102.30. And then the targets are about 110.75, 114.97, so essentially 115 and 119.20. If we do close, and this time we need to close slightly below the GAN level, coming in at about 85.37, so slightly below that, and we have a defining point on the trend line there, which would also trigger a trend line trade to the short side with an ultimate target. Let me draw out the ultimate trend line trade target to the short side, and this could be, again, if you don't want to short, where you'd look to buy. The horizontal channel targets are 76.91, 72.68, and 68.45. And if the trendline trade did go all the way down, we'd be looking at an eventual target right near the 200-day simple moving average, just below that 54.78. So we'd bump this actually up probably to the breakout zone, minor breakout zone 56 level. So that's the way it's looking in Monero, both to the long and the short side. Again, if you're not into shorting, then you look for these levels as key buying opportunities should you get a reversal pattern or one of our reversal patterns that we follow at those levels. That's what we have for you on Monero US dollar. Back to you, Bob.
Thank you for that, Michael. Thank you guys for watching. Again, we appreciate any comments, positive, negative, agree or disagree. We're going to address the ones that we can. So thank you very much again for those comments. They're always going to be appreciated by us. Thank you for helping us grow this channel. Hit like and hit subscribe if you haven't already. If you have, thank you. And also consider supporting us on our Patreon page. The link to that page is in the description below. Cheers, guys. We will talk to you in the next Path Chat.